Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have here is, write the rules of debit and credit as per American approach. So what is American approach of accounting? Again, in accounting there are various approaches to record transactions for the businesses. That means for the process of accounting there are different approaches. In this question, it is asked about the rules of debit and credit as per the American approach. So what is the American approach? Under the American approach, the accounts, that is the ledger accounts that we prepare in the bookkeeping stages, are divided into 5 categories. That is the asset accounts, the liabilities account, the capital account, the revenue account, and the expenses account. So what are the asset accounts? Asset accounts are all those accounts that are the assets, or we can say the property of the business. For example, machinery becomes an asset account, then cash becomes an asset account. So these are asset accounts. Next, liabilities account. What are liabilities account? The liabilities are those amount of money that the business owes to someone else. So all those accounts are liabilities account. Under liabilities accounts, there will be creditors of the business, different kind of creditors or loan accounts. All these are liabilities accounts. Next, we have capital account. Capital account is nothing but the money invested in the business to keep it running. So that money is recorded under the capital account of the business. The next is again revenue account. Revenue accounts are all those income accounts of the business. So under the revenue accounts, the interest received will come, then again rent received. All these accounts are the revenue accounts of the business. Next is expenses account. All the expenditures of business comes under this account, expenses account. For example, depreciation is an expenditure account, salary paid, salaries becomes an expense, comes under expenses. So all the type of ledger accounts that are prepared in accounting, in the process of accounting, those ledger accounts are divided under these 5 categories. That is the assets, liabilities, capital, revenue, and expenses. Again, we have to understand in the American approach, the assets, there is an accounting equation that this American approach follows. That is, assets is equal to liabilities plus capital. So this is the basic accounting equation that the American approach follows. So now, as the question has asked, what are the rules of debit and credit? So again, every kind of asset, sometimes it is debited and sometimes it is credited. So what are the rules for it? So the first is, in case of asset accounts. So in case of asset accounts, like I said, cash account, machinery account, these are the asset accounts. So what happens when the asset increases? The asset account is debited. So an increase is debited. So but when the asset account decreases, it is credited. For example, here purchase of machinery increases assets, so machinery account is debited. So in the same example, if we see machinery, if the machinery is purchased for cash, then the machinery is increased, so the machinery account will be debited as per the rule given here. But cash account decreases here, because if the machinery is purchased for cash, that is the cash payment is made in this purchase, then what happens? The cash decreases. Again, we see the cash is also under, or it also falls under the asset account. So here cash account will be credited. So in the same example, machinery account will be debited and the cash account will be credited. The next rule is for liabilities account. So in case of liabilities, when liability increases, we debit those accounts. So when the liability increases, we credit the liability account. So credit when liability increases and debit when liability decreases. Your example is taking a loan increase liability, so loan account is credited. So if the business takes a loan from a bank, then loan account will be credited. So when there is an increase in liability, the liability account will be credited, and when there is a decrease in liability, so suppose the loan is repaid after some time, the same loan account will be debited because it will decrease, the amount of loan will decrease. So these were the rules for asset accounts and liabilities accounts, where an increase in asset will be debited and a decrease in asset will be credited, and in case of liabilities, an increase in liabilities will be credited and a decrease in liabilities will be debited. Now we move to the next accounts, the rules for the other account. So in case of capital account, it is somewhat similar to liabilities account. So when the capital increases, we credit the capital account, and when the capital decreases, we debit the capital account. For example, when fresh capital is introduced, capital account is credited. So when some amount of money is invested, that is the fresh capital, then we credit the capital account. But if some amount is withdrawn from the business, again in that case the capital account will be debited. Now in case of revenue or income account, when the revenue increase, we credit. So credit when income increases, and when the revenue decreases, we debit these accounts. So debit when income decreases and credit when income increases. The example that we have here is sale of goods increases revenue, so sales account is credited. So when there is a sale of goods, the revenue increases, so the sales account, which falls under the revenue account, will be credited. Now the last type of account under the American approach is expenses, or we can say loss account. So when an expense or loss increases, we debit these accounts. So debit when there is an increase in expenses or losses, and when there is a decrease in losses or expenses, we credit these accounts. So credit when there is a decrease in expenses or losses. The example is, here is rent paid increases an expense, so rent account is debited. So again, rent is an expense for the business and it has increased. Rent payment means the expenditure has increased, so we debit the rent account here. So these were the rules of the accounts that we maintain under the American approach of